Okay, here's our update on the broader markets. It is September 10th, and so we'll be reviewing how we closed last week and really what that means for the coming week and really the full month. Because we're still, relatively early in the month. Right now, for the most part, this weekly candle is really representing the month at this point. And we know we have the CPI print coming up, which we'll talk about here. So we'll start with the daily chart. This is the S&P 500, and I'll say this is what's driving most things, including precious metals, uranium specifically, uranium, anything you can kind of think of, risk assets, crypto. They're all kind of moving very closely together. You can notice everything is kind of printed a very important swing low. So Friday was day 3. You can see 3 really strong trend days up, which to me suggests we could be in for some chop, right? Like that's how markets move, right? Even if we're moving higher, we're going to make higher lows at some point, right? So who knows? Maybe we have another update Monday and then, some chop at some point, right? But the important thing to know is we're going to get that CPI number on the 13th. So that'll be 8:30 a.m. That's going to be an important pivot point. And then you have the Fed meeting on the 21st. So one way to use cycles to kind of handicap things, right? And as I always say, please take a look at the links in the description. Cycles Analysis 101. I'm assuming you've already looked at that kind of content. You understand what I mean when I talk about daily cycle lows, daily cycle highs, etc. This is a way to kind of try to handicap it, right? So we know we're on day 3, and by the time we get to the Fed meeting on the 21st, or I should say the Fed announcement on the 21st, they're going to announce it. It's always a Wednesday on at 2 p.m. That'll be day 11 of the daily cycle. So we're on day 3 right now, right? And so that's really important to know because that means essentially you have to ask yourself, are we going to get a top before that Fed meeting, right? Or are we going to maybe rally into the Fed meeting and maybe we get some kind of fake breakout above like 4,300 maybe even, and then come down? Again, and just to be really clear, this is never about predicting what's going to happen in the markets. I don't think that's actually possible. That's a fool's errand. This is about thinking about what are the most plausible scenarios based on the data and then reacting to them in real time as they happen. And real time is relative. If you're talking about something on a long time frame, you'll have multiple days to make decisions sometimes. It all depends, obviously. So these are important dates, that 13th, next week, and then we're going to have that Fed meeting a few weeks later. Or actually, I guess the week after that. That's going to be really important. And so you could see a world where, we're going to kind of rally, maybe make some higher low, and then maybe just kind of work our way up here. Now, here's where it gets really important. Like these levels become very clear on the weekly chart. So we just finished week 12, and again, we knew we were going to get a week daily cycle low at some point. It's always a question of how strong is the bounce out of the daily cycle low going to be, right? So far, let's look at this on percentage terms. So we've bounced about 4.7% from the bottom so far, right? That's just looking at your weekly. Let's just see. I mean, you would think that should be the same. Yeah, exactly. All right. And so we've that's a healthy move, and more importantly, it was a bullish outside. We closed right above the high from the week before, right? So we made a new low, and then once we started to go green, you knew there was a possibility that we were going to make that high above here. I tweeted about it multiple times. That becomes your target. You can go long there. That's a great way to use options with specific strikes and specific dates, right? Like that's a perfect way to use options. It's a very high probability pattern. And now we would expect that there's going to be some follow through, but again, that doesn't mean there won't be some chop before, because again, we've had a really powerful trend move. But here's where it gets important, right? The next really big level is going to be this, so you had this candle here, right? That this was your last sort of bullish week, right? Because this week made a higher high. It looked bullish at one point. This was a green candle, but then we kind of failed. So the low from this candle, right? We opened this week, it was a gap down and then just kind of failed. And so getting above this level, the low from this candle, this last kind of bullish week is important, right? Because this is the last week where, the bulls were in control, if you will. So once we're above this low, we're now starting to inch into that territory. And then you can imagine this gap fill starts to become a very kind of juicy target. Like maybe we get on the other side of this gap fill. And again, this is a gap on the weekly chart because it happened on a Monday. So now it becomes between a Friday and a Monday. So it becomes a gap on the weekly chart. That's a long way up. I mean, let's see. What are we talking in percentage terms from here? So if we just like fill that gap, that's actually not even that much, right? So another 3.3% up and we would fill that gap. And I mean, even just getting back to that high is only another 6% from here. So that's going to be interesting. And that's your real level. That's your breakout level at 43.25. Obviously, if you get to even this part, right? So like, let's just say, call it this level here, right? That's starting to tell you, like, just basically the underside of the gap. That's starting to tell you this is probably not your weekly cycle high. That's always possible. Again, we are following price action here. The cycles detail the price action, not the other way around. And so we'll have to see how that plays out. But next week, again, that's going to be critical to see how we kind of react to that, a CPI print. And then you'll have to see, okay, maybe we're going to continue to move higher. It does seem like we're leaning higher at this moment, at least. And if you look at the monthly chart, that's the other thing. Then this is really important. Remember, I'll just go back to that weekly just to be really clear. I'll zoom in. We made a low below this candle, and then we even closed above the high from this candle. So not only did we make a new high above it, but we were able to hold it into the close. So we completed that pattern, right? Once we made the low below here and then started to reverse, you could set your target that we would get to the high from this candle, 40.62. So the same exact principle, like price action principles, apply on all time frames, right? And so, if I go to the monthly chart, we've got a nice green monthly candle. Again, that's because it's still early. Really, this monthly candle is really just kind of the weekly candle for the most part. Next week, we'll start to get some differentiation. But if this keeps running, again, and that's why this is important, the multi-time frame analysis, that 4,300 breakout level area is going to give you a new high on that monthly chart. And if you just kind of look at the perspective above this line here, right, that's your potential breakout that, okay, maybe this, again, as I keep saying, that's our real question. Is this really our sort of long-term cycle low, month 27, June, right? That's our real question. This is setting up to tell us that it's not. And again, we knew we were going to get a daily cycle low, and so we got 3 really powerful days. That's what this is really. That's essentially what what is now a big monthly candle is, those 3 days. And so I always say, get more excited about the pullback than the rally, because this pullback is going to tell us if we're going to, continue the uptrend. Like, for instance, when I say the pullback, like, if you kind of zoom in on like this move up here, well, obviously you had this red day that was kind of scary, but then you had this nice little move up, and then you had this little pullback, and then you made this swing, and then you had this swing low once you went above this high, right? That's an example, like, oh, that's nice. Once you had this swing low, then you're like, oh, that's nice. This is a nice little shallow pullback. Actually almost kissed the 10-period moving average and then kept moving. That's what you'd be looking for to confirm that we are continuing the daily uptrend. Even if it doesn't mean we're not going to make lower lows or we're not going to continue to chop around, but for a trade that could last a few more weeks. That's what we would be looking for, because we're going to need to get some kind of pullback off this at some point, obviously. And so I'll just really quickly spin through Qqq and Iwm, because it's the same thing, same count, 3-3. Day 3, same idea. So Q's closed above as well, in terms of the bullish outside weekly, and looking at the same thing. And so for the Q's, that would be a move on the monthly above 334, and we're here at 330 and 307. So that's a pretty nice move, like $27 on a $300 ETF. And so IWM is the outlier here. It did not actually make a bullish weekly outside candle. So you see, again, it made that lower low, but it did not make that higher high. And again, this is week 12. It looks like we have our top on week 9. That can change. Price action can change. Next week, we're going to have to see, how does this thing react to a pullback, which we know has to happen, right? Not saying it's a daily cycle low pullback, but we know the advancing phase of a daily cycle doesn't just unfold without any sort of minor pullbacks. So that's what we're gonna be watching for.